What's up? Another episode of Chalk Talks with Coach B today. I want to talk about SSR days and what it means, and also why it doesn't always mean the stock won't be manipulated. Before we get into it, please hit the like and subscribe button to help support this channel. And also, if there's any topic you'd like to see me cover, please leave a comment below in the video and I'll start working on it. Okay, let's get back down to business. So first off, what is SSR? I'm sure anyone who's been dabbling in potential short squeeze stocks this year has heard about it at some point. SSR stands for short sale restriction. And essentially, I don't know, about 10 or 11 years ago, this rule was put into place that if a stock went down by more than 10% from its previous day close, it would be put on the short sale restriction list. So basically, let's say again, stock opens up at 10. It closed at $10 yesterday. And then now today, in the middle of the day, it drops down to $9 and $9, right? That's 10%. It drops down below $9. Now it's hit under 10%. So now it would go immediately on the SSR list. What that means is that for the remainder of the current day, so this, like let's say today when we got below 9, and the following trading day, so tomorrow, or if it happened on a Friday, it would be Monday. But short sellers can only short on upticks. So yes, when a stock is on SSR, shorting can still take place, but they basically can only legally perform limit short orders. So remember, shorting a stock is selling a stock you borrowed, and whenever you sell, you could do it as a market or a limit. So these guys can only go in and place limit sell orders, to open up new short positions. Okay, so, aggressive short sellers would typically want to perform market sell orders to like blast through the bid side of the level two. If you watched the last video, I was kind of explaining how if you wanted to like make a stock go down or up, you could aggressively, perform market orders to eat through the bid or the ask to make a stock go in a specific direction. So aggressive short sellers would typically want to like just short into the bid and keep knocking through all those levels of support and drive the stock down. But on SSR days, they're only supposed to be able to set limit orders, like, basically create resistance levels on the level 2 side or sell walls that are going to prevent the stock from moving higher. Now, you would think this would result in a positive day for a stock, right? Because there wouldn't be a lot of downward pressure. And, sometimes that's true. But when you're dealing with highly manipulated stocks, that's not always the case. I mean, if a stock's manipulated and someone's willing to cheat to move a stock downward, why would they follow the SSR rule, right? So if I was a short seller and wanted to continue to apply downward pressure on an SSR day, how could I do it? Well, one way I could think of is we talked about dark pools before and how they don't really affect driving the price upward no matter how much buys come in there. It just kind of trades at the current price. So, I could go onto the dark pool, buy 100,000 shares, not drive the price upwards, and now turn around and start selling those shares that I now own aggressively into the market, as market sells and hammering through the bid. Technically, I'm not shorting the stock, right? Because I own it. I'm just selling it at this point, but I am going to be able to aggressively drive the price down. Second way, which is pretty similar, is, if you were to go in and buy deep in the money options, let's say the stock's trading at $10 and I could go in and buy options at the 50-cent strike. Yeah, it's going to cost me a little bit more, maybe cost me like, stocks trading at 10, maybe I'll end up paying $10.10 for the stock, but now I have stock in my possession without driving the price of the stock upwards. And same thing as if I bought it on the dark pool. Now I could go in and aggressively sell that stock downwards and drive the price of the stock down. And as always, in the middle of all that, they can kind of just go in and create naked short positions, right? I mean, that's illegal in itself. So why wouldn't you do it on a SSR day? And basically, just tag the shares they're selling as previous long positions, not shorts. So now they have the ability to sell downwards, without kind of hitting that down tick rule, and either cover before the end of the day, so that way it doesn't even really show up, or taking FTD to the clearinghouse. I mean, essentially the short sale restriction was created to ensure stocks weren't being manipulated too heavily by short sellers. And the main point here today that I wanted to cover was, what the SSR is, the short sale restriction, and also kind of illustrate that manipulation still exists on these SSR days and doesn't always equate to a green day for a stock. Now, I kind of talked about the practice of buying on the dark pool or exercising in the money options, how it gives short sellers access to shares. But I do want to point out that it also creates additional problems with FTDs, and that's a topic that I'm going to cover in my next video. Okay, so I hope you enjoyed this episode of Chalk Talks with Coach B. I tried to make that last video was a little bit longer. I wanted to make this one a little bit shorter, and I'd really like to have these videos kind of be a little bit shorter so that they're easier to just kind of cover one small topic. But anyways, hit the like and subscribe button if you're enjoying the content. Comment down below with any future topics you would like me to discuss. And if you'd like to check me out live, I'm streaming every morning at 6 a.m. Pacific, half hour before the market opens. Have a great day.